the Carl Chevrolet Studios in West Des Moines. Happy New Year, everybody. 2022 is upon us, and boy, oh boy, we are raring to go. Did you do all the good luck things you were supposed to do at the stroke of midnight when it rolled around here? Did you hold up your silver coin and eat your herring like a lot of folks did? Well, that might be good luck for you in the future, but how about we plan a little further as into your retirement future? And that's why we talked to our buddy Loren Merkle from Merkle Retirement Planning about this time. And Loren, Happy New Year to you, my friend.
Happy New Year to you, Lou. Thank you so much. It's good to be here on the first Monday of the new year.
Yeah, how about that? Now, well, we need to start planning. I know it's only day 3 of 2022, but it's never too late to start planning for your retirement future, is it?
No, it's not too late. In fact, it doesn't matter what phase of your savings you are in, it's not too late. If you're 20 years old, might as well get started right now. If you're 65 years old and maybe you retired last year, but yet you don't have that written retirement plan, it's still not too late for you either.
All right, let's take a look at things that we lived through in 2021 right now. Let's recap of what happened in 2021.
Well, I think we all kind of feel like we limped through another COVID year, but when we look at the stock market, it did anything but limp. It was up, the S&P 500 was up near 30% year over year. So we felt like there was all these challenges, financial challenges, and there really were, but the stock market kept forging ahead. And one of the things that we saw change last year, as opposed to what we see really for the last 15 years, was inflation. And this is what everybody's talking about. You turn on these business networks and they're talking about inflation, inflation, inflation. We have, in the last 15 years, inflation has averaged under 2%. But last year, we started to see it uptick over 6%. And this is a concern for a lot of people as it relates to how affordable our goods and services going to be this year and into next year. And this is one of the things that could impact somebody's retirement plan from a spending or budgetary standpoint. It's something we have to keep an eye on as we build out retirement plans.
Now, in the past, Loren, were people planning on inflation being like 2 or 3%? Is that how they calculated what they should have?
Typically, when you build out a plan, you're going to calculate, or you're going to assume a rate of return somewhere around 2 to 3% for inflation. If we look back at the 70-year history of inflation, it averages a little bit over 3%, but again, the last 15 years, a little bit under 2.
All right. So again, with 6, that would really put a crimp in a lot of folks' plans if that does continue. And what's your speculation? Do you think that that's going to continue?
It's going to be really dependent upon a couple different things. One is the supply chain issue that we have. If we look at the overall economy, the economy really is in good shape, but we do have some concerns. The supply chain issue is a big thing that we have to get figured out. If we can't get the supply chain figured out, or if we can't get people back to work and get people employed like it was 2, 3, 4 years ago, we're going to have some serious issues. And all of those have an impact on the overall economy, but also the market. The other issue that we have to be concerned about is how big of an impact does long-term inflation have on the economy and prices of goods and services? So far, the markets haven't really been that concerned about what we've seen from short-term inflation. And even if inflation continues to go, it doesn't necessarily mean that these markets are going to be disrupted. If we look back at the last high inflationary period of time that we have, back to the late 70s, early 80s, when people were paying double-digit interest rates on their mortgages, really, that's the last real high inflationary period we saw. The stock market did prevail over that time frame. From 1982 all the way up through 1999, the S&P 500 was only down 1 year, 1990. Every other year, the S&P 500 was up. So even though inflation is here and probably here to stay for the near term, it does not necessarily mean it's going to disrupt the markets, doesn't necessarily mean it's going to disrupt your retirement plan if you have it appropriately appropriated throughout your overall retirement plan.
So if you have the proper retirement plan, you should be able to weather the storm. Now, if people want to sit down and have a conversation with you, Loren, what is the easiest way they can do so?
Yeah, we make this very simple. All you have to do is go to merkleplan.com. You can sign up for a complimentary 15-minute retirement checkup phone call with a retirement planner. There's a link. All you have to do is click on that link. That will take you directly to one of our retirement planners' calendars, set up a time that's convenient for you to talk through what your retirement plan might look like.
How about that? And don't forget about the Merkle Retirement Planning YouTube channel. Tons of videos on there to answer just about every question you might happen to have. But I guess the bottom line here is that don't let what's happening with the stock market derail your retirement plan. Sit down and have a conversation with Merkle Retirement Planning.
That's exactly it. Everybody's concerned about this market. The market does not have to mean that you're going to have a bad outcome from a retirement experience standpoint if you build your investment plan and make it integral to your overall retirement plan.
Well, Loren Merkle, Happy New Year to you once again, and we'll talk to you real soon.
Happy New Year, Lou. Talk to you soon.